Okay, getting back with the market right now. Let me just check in on where the market is settled in at after those first rates, of course, falling about almost 0.5% in trade. We're now settling around 140 points lower. So once again, getting close to testing the 24,100 mark for the Nifty futures. Under pressure, Shriram Finance, that's down 3.5%. Interglobe Aviation is now down a good 3% as we speak right now. Look at HCL Technologies. The numbers coming in line. The guidance not revised or kept as is. Stock falls 2.5% lower. M&M down 2%, Bajaj Finance down 2%, SBI down 1.6%, L&T. That's the spring of heavyweights which are pressuring the market right now. Having said that, the breadth of the market as well is in the red. Names like PNB Housing, Chola Finance, AB Capital, LTF, they're all under pressure. But on the flip side, handful of winners as well. And Adani Power, which is holding up about 3.5%, MCX, Astral, Concor higher by 3.5%, and Biocon after that block deal continues to hold up 6.25% as we speak right now. But let's try and understand what really is happening at Mass Financial. We've got Kamlesh Gandhi, the CMD, joining in on the show right now. Kamlesh, great to have you on ET Now. Thank you so much for your time. You know, you had guided earlier about a 25% AUM growth for the entire year, which is up from that 18-19% on run rate that one is used to seeing. What's changed operationally for you to stick to this guidance?
Good morning. So I might give you a broader picture because we are into silent period. So just to share with you that we have always been sharing the view that we'll grow anywhere between 20 to 25%. And I think this year, at the beginning of the year, we had given that guidance that we'll grow anywhere between 20 to 25%. And as of now, we look well on track.
Mr. Gandhi, the other thing, hi, firstly, very good morning. The other thing you're doing is you're moving into vehicles, right, which is auto loans. How is that playing out, and how is growth over there in terms of the numbers? How much will that contribute to overall growth this year?
I think if you see our wheels portfolio had contributed close to 12 to 15%, and we maintain that it will continue anywhere between 12 to 15% this year also on an expanded AUM. So slowly and within next 3 to 5 years, we'd like to see this growing to around 20% of our AUM. But this year we said anywhere between 12 to 15% of our AUM.
Okay, and it's a relatively newer domain and portfolio for you. What gives you comfort that things will play out well from an asset quality standpoint, especially given that it's been a difficult kind of weather pattern, right? So could you give us some color, some texture on what's playing out on asset quality at this point, given everything that's playing out in the weather?
See, we have always maintained that the AUM will never grow at the cost of the quality of the assets and hence the profitability. So we'll be maintaining that, and we are watching the current situation very closely. But as I told you, as far as the current scenario is concerned, we are well on track. And if we can maintain the trajectory of our NPAs in the levels where we are comfortable, I think we should be in a position to maintain our 12 to 15% of contribution from the wheels segment.
Specifically, I want to talk about MSMEs as well, because that segment, Kamlesh, has consistently driven about 60% plus of your AUM growth. At what point does that concentration become a risk rather than a strength for you?
See, if you see, MSME has been a very wide market. Right? Given at our size, with the portfolio what we have built up, we have just scratched the surface. So within MSME, we have a lot of diversification, right from MEL to where we saw as to the ticket size of as low as around 1 lakh or so, right to SMEs where we give up to 5 to 7 crores of rupees. So within the MSME segment, we are well diversified, and looking at the market size, and I think we are well placed for at least a few more years to concentrate on MSME. And going forward on a group as a whole, we think that MSME should contribute around 50 to 60%, and the rest should come from wheels and the personal loan and the housing loan segment.
Growth, Mr. Gandhi, this time around looking stronger than what Q1 typically is. I'm not asking for any numbers. I'm saying industry-wide. Do you feel that the growth is much stronger than what a typical Q1 is?
Yeah, it's if you see the headline numbers of many of the NBFCs also, they are showing a relatively stronger growth as compared to other Q1.
And therefore, do you think that full year, one, the growth will sustain, and two, likely beat what the guidances broadly have been across the board, probably at the end of Q4 when those guidances actually came through?
And I think looking at Q1, once again, I will reiterate that we would like to maintain the growth anywhere between 20 to 25%, irrespective of the opportunities what we get. So we personally believe that in the lending business, it is very important to grow steadily but solidly, because even in growing at around 20 to 25%, you double your AUM every 3.5 years. So besides the opportunity, it's also the strategic intent of the company to grow anywhere between 20 to 25%.
No, fair point. And Mr. Gandhi, last off, a possible concern, right, for Mars. I'm just trying to understand. You trade at roughly 2 times book, and therefore, for a 25% growth kind of business, the valuation looks slightly more subdued versus some of the other peers. One of the possible concerns could be succession to a certain extent. Are you comfortable with the way things are shaping up? I know there is a long runway even for you, sir, and hoping that. But do you believe that some bit of planning from a future leadership perspective is well in place for you?
See, I have shared this number of times that we are very strong second line of management. We have around 25 to 30 people who are working in the company for more than 25 years. If you see our presentation, all the senior team is more than 5 to 7 years with the company. So they are more than capable to take this company forward. Besides having a very solid promoter interest, the next generation from our side has already been in the business since last 10 years, showing a very strong promoter intent to be with the company, not for a few decades, but more than that. So from the promoter side and from the management side, we have shown a very strong strategic intent as far as the succession plans are concerned. And as far as I am concerned, I'm more on the strategic part of it. Since I have no other thing to do, I have an hands-on approach, but it's not something that it is required. It is by choice. So this a very strong second line accompanied by the promoters also having the inseparable interest in the company. I think that there is no doubt about as far as the succession is concerned. And just to share with you that we have proved that in the past, not a desirable situation at all, but unfortunately we lost one of the co-founder 5 years back, and we have been in a position to maintain the trajectory of the growth and the quality of the assets and the profitability irrespective of that. So I think succession at Mass is well placed, and we are slated to create this company for generations.
Taken, sir. So last off, just trying to get a pulse of what's playing out on asset quality differently this time. The rains were delayed, but everyone we've been speaking to on ground says that asset quality has been robust. So generally, with delayed rains, you tend to see some slippage there. No signs, at least at this point, from an industry standpoint, from your standpoint, if you can give us any color.
So such things will play out over a period of time. It does not play out immediately. So as we have always maintained that whether it is macro headwinds or tailwinds, it is for the individual companies to assess the risk at the ground level from time to time and take their credit decisions accordingly. So for companies like us who are always cautious, who are very steady in their growth, and if I share with you that even during a very tough period like COVID, we could maintain a good asset quality. So all these things will play out over a period of time. It will play out differently for different companies depending upon their approach to asset creation and how they dispense credit. So it will be more company specific rather than the industry as a whole.
Kamlesh, great to have you today on Neeti Now. Thank you so much for your time.
Thank you. Thank you. Thank you.
Okay, let's revisit some of the buzzing stocks in Kalyan Jewellers. That's clearly staged one of the sharpest rallies on the street, soaring over 40% in just 5 trading sessions, comfortably outperforming Titan. But while the momentum is strong, Titan still leads on scale, same-store sales and long-term stock performance as well. Ashesha joins in to give us a comparison of how both stack up.
Well, yes, lots happening in India's jewelry sector, so we decided to take stock of how valuations stack up for both these players, Titan and Kalyan Jewellers, and how the stock performance has been. First up, let's put the spotlight on the stock performance and look at the kind of outperformance Kalyan Jewellers has reported over the last 5 sessions. That stock has run up 43% in the last 5 trading sessions versus Titan, which has barely risen about 0.5%. We have seen this kind of outperformance not only for the last 5 trading sessions, but even for the last 1 month and 3-month period. But if we increase the time frame to slightly longer 1-year time frame, then we have seen Titan outperforming Kalyan over the last 1 year by surging nearly 37%. So that's how the stock performance has been of Kalyan versus Titan. Kalyan clearly has outperformed Titan over the short-term period, but over the long-term, Titan clearly has turned out to be the outperformer. Let's also put the spotlight on the valuation metric then and how that stacks up. Now, Kalyan, remember, trades at about 30 times 1-year forward price to earnings versus Titan, which is at about 61 times. Of course, it is on the back of the scale that it operates at and the brand name that it has, and that is the reason it is expensive as compared to other players like Kalyan Jewellers, which trades at 30 times forward 1-year forward price to earnings. Price to earnings, meanwhile, at 52-week high levels is at par for both the companies, which is at 88 times for Kalyan and about 93 times for Titan. So that's how the valuations stack up. But clearly, if we compare the 1-year forward price to earnings, Titan justifies the premium because of the scale and size at which it operates. Meanwhile, first quarter FY27 performance, let's also put the spotlight on that. Kalyan reported largely mixed set of numbers. In fact, after it reported its numbers, the stock did decline a tad bit before rising 43% over the last 5 trading sessions. Titan, on the flip side, reported very strong Q1 FY27 with 46% revenue growth, 39% SSSG growth, and store count now stands at 1,227, double of what Titan currently is at about 524 stores. So that's how the performance was for Kalyan and Titan in the first quarter of FY27. Let's also put the spotlight on a couple of other parameters then. And firstly, guidance. Kalyan Jewellers has said that they will be adding 150 new stores in FY27. And Titan, meanwhile, has not given a store guidance, but they have said that they are eyeing 15 to 20% jewelry growth on a CAGR basis over the next few years. So that's how the guidance stacks up for both these companies. Kalyan Jewellers is a debt-free company. It is targeting to become debt-free in the first half of FY27. But Titan, meanwhile, has said that they are looking to double their jewelry business going forward. Let's also put the spotlight on a couple of other parameters then. And Kalyan Jewellers said that they are looking to focus on a couple of specific segments within the jewelry sector, while Titan is eyeing 20% CAGR by FY30. So the outlook is not solid just for the next 1 year, but until 2030, the outlook continues to remain very positive. 10% SSSG target for Kalyan Jewellers, and Titan, meanwhile, has said that margins are expected to be in that range of 11 to 11.5%. Let's also talk about a couple of other factors and the triggers that Kalyan Jewellers shareholders should perhaps keep their eye out on. Store rollout execution, franchise mix evolution for Kalyan Jewellers. Same-store sales growth has been very strong in the first quarter, but will that continue? That is another important question. And a specific growth and segment categories that they are looking to focus on. So these are largely the triggers for Kalyan Jewellers, a stock that has risen nearly 43% in the last 5 trading sessions.
Okay, that's the take coming in on how Kalyan as well as Titan stack up. But on that note, we're completely timed out in this edition of The Market in First Trades. It's a goodbye from Harsh and me.
Hello and a warm welcome. You've joined us here on Midcap Masala on ET Now. I'm Ashesha Atwaryu. With me is Merul D'Souza, and this is turning out to be another weekday for Indian equity markets. But this is a show where we take you through all the buzzers from the midcap, and we will also get you some more managements on the show. So let's get started. And first up, let's take you through all the top headlines that we're tracking at this hour. PDS Limited zooms 14% in trade after the company says that it has signed a multi-year sourcing as a service or SaaS agreement with the global sourcing arm of a leading French headquartered global supermarket retailer. Under this agreement, PDS will manage the retailer's textile and apparel sourcing from Bangladesh, India, Pakistan, Sri Lanka and Turkey. PDS expects to manage annual apparel sourcing of over $250 million under the agreement. The stock is up 10.5% on the back of this.
Switching focus, Just Dial has zoomed another 11% today after gaining on to yesterday's 20% uptick. The company has appointed former Flipkart executive Dinkar Ailavarpu as CEO and KMP of the company, who's starting with effect from the 10th of July. Now, he has more than 2 decades of experience in building, transforming and scaling businesses across digital commerce, retail and technology.
And shifting focus to the cement sector, then Nuvoco Vistas zooms nearly 13% after reporting 9% YOY growth in the first quarter FY27, with EBITDA margins largely stable. But remember, realizations have risen, and that is the reason the stock is now up nearly 8%. The company remains on track to increase its capacity from 25 million tons per annum currently to 35 MMTPA by FY28. The stock is zooming on the back of strong results that it reported.
Also in focus today is Concor. It zoomed about 5%, with EXIM volumes for the company rising 10% on a year-on-year basis. DOM volumes in the first quarter stood at 3.35 lakh TEUs, which has seen a jump of 6.2% on a year-on-year basis as well. Total volumes for the company has also risen by approximately 9% on a year-on-year basis.
And IDBI, meanwhile, is gaining 3% in trade. Agencies have reported, citing sources, that the Indian government is close to accepting an offer from Fairfax Financial Holdings for IDBI Bank, possibly at a higher price after its original offer was earlier rejected, as it was below the government's reserve price. The stock is now up more than 4% on the back of this news.
And we're seeing Astral gaining up to 3% in today's trade. Morgan Stanley has maintained a buy rating with the target price set at rupees 1,660 per share. But they have said that this is a tactical call, and they expect the share price to rise relative to the index over the next 30 days, with an 80+ possibility assigned. They've also added that valuations are remaining more reasonable after a period of underperformance that they've seen in the stock, and that the stronger growth and margin expansion is expected to support a very attractive risk and reward returns at the stock's current levels.
Okay, so those are all the top headlines that we are tracking at this point in time. But now let's put the spotlight on Muthoot Microfin. That company had reported its operational updates for the quarter gone by, where AUM saw an uptick of nearly 18% on a year-on-year basis. In fact, disbursements surged by a whopping 49% YOY. So what led to that, and what's the outlook going forward? To discuss that, we are now joined by the CEO of Muthoot Microfin, Mr. Sadaf Saeed, who is now joining us. Sir, morning, and thank you for taking your time out and joining us here on ET Now. And first up, let's talk about the individual loan portfolio, and that has risen from about 2,400 crores to 3,200 crores in just about 1 quarter. That's a fast ramp up, isn't it? Is the near zero delinquency that you are citing still true at this larger base, or do you think now it is perhaps too early in the seasoning cycle to call it really clean? What's your take on the growth profile and what it could look like going forward?
Yeah, good morning. Thank you for having me here. I think the portfolio that you have cited in terms of an individual loan is our effort to take the aspiration of the growing microfinance client to the next level, because if you look at financial services and especially microfinance over the period of time has evolved. And these are customers who have been served by microfinance industry for almost a decade. And now those customers have developed a good amount of credit worthiness and a track record. And that is what we are identifying these customers and elevating them to the next level, where they can take their business to the next level and giving them a loan which suits their individual profile and carefully assessing their requirements. And also, the way we have built this portfolio is a very scientific way in terms of understanding their credit behavior. All the customers that we are giving loan to are 700 score plus. We are doing a proper underwriting on those customers, understanding their cash flows, understanding their credit need, and then giving them a loan. So that's why the portfolio is behaving so well. We are now around 3,214 crores of AUM for these individual loans alone. And the record of zero delinquency still remains. So it is 10% collection on time, which is happening for this portfolio. And this has been almost like 18 months in this portfolio, and it is good enough time to test the creditworthiness and the robustness of the portfolio. Of course, in the coming days, we will see what impact it can have with the various macroeconomic activities that are happening around us. But overall, I think the health of the portfolio is really, really good, and it has helped the company to kind of turn around. We had 14,000 crores of portfolio at the end of the year. We have seen an 18% year-on-year growth. The disbursements have also grown significantly year-on-year, almost 50% growth in disbursements. And these disbursements are largely 50-50 in terms of individual loan and 50% other loans that is happening. And it is helping us to take the digital agenda forward as well, because all of these loans which we are giving in the individual format are digitally collected, all based on eNACH and UPI. So all the repayments are digital. So the profile that we are catering to is very, very prime in this, and they are really paying well.
All right, understood. Good morning, Mr. Sadaf. Meryl D'Souza here joining in as well. I just want to understand from you, gold loan disbursement is currently at 192 crores so far, which is under the referral or co-lending model with Muthoot Fincorp. And this is at a relatively smaller base. So what's the realistic AUM contribution that you are expecting from gold loans coming in by the year FY28?
Well, this is something that we have been working on for some time. We have analyzed our portfolio, and we have seen that almost 3.5 lakh borrowers are having gold loan exposure outside. We want to bring them into the Muthoot fold. And this is the beginning of that transition phase, because before this, there were certain co-lending guidelines which were not very clear in terms of whether two NBFCs can have a co-lending partnership. And also, there were certain new guidelines which has come in for gold financing itself. So once these guidelines were in place in April, we have started this co-lending, and a lot of businesses coming through. And we are seeing a rapid pace of growth. Every month, we are disbursing almost 100 crores in gold loans to our clients. And we feel that for the financial year, we should be able to disburse around 1,200 crore. The only catch here is gold loan is generally a shorter tenure product. So the AUM might be smaller, around 500 crores, but disbursement would be 1,200 crores. And this will really give us a good kind of a return on asset situation, because the earning assets would be like very frequently churning, but there would be good earning for the portfolio, for the company from this portfolio.
Okay, and while we are talking about gold financing, I also wanted to get a sense of the impact of volatility that we have seen in gold prices. Has that had any kind of impact on your gold portfolio?
No, that's a very good question to ask. So one of the things that we make sure is that we are not giving excessive leverage to our customer. The LTV on this loans is very conservative. It is 75 and below, while we are allowed to give up to 85. So we make sure that there is a loan given basis the eligibility and the capacity of the customer. So that way there is enough headroom, even if there is some correction in the gold prices. it would not directly impact the portfolio. And these are already credit tested customers. They've been with us for more than 3 years, all of these customers, and they have shown their ability to repay on time. So I don't see that there will be any challenge because of the gold prices or volatility. In fact, it gives us a good avenue for our customers to give some liquidity to them, and also kind of deepen our relationship with them, because Muthoot as a brand is very well known across the country for gold finance, which is one product that we always wanted to offer to our customers. Now, under the co-lending arrangement, we can definitely offer.
Right. So, sir, now shifting focus a little bit now, with RBI's policy rate trajectory largely stable and inflation as well ticking up, how much of your NIM expansion story really depends on the rates staying benign? I'm just trying to understand, if rates do move against you, does the 13.5 to 14% NIM guidance, which is there, does that still survive?
Definitely, I think in terms of our NIM improvement, there are two aspects to it. One is on the yield on the portfolio is improving because of repricing of the loan as well, and also because of the improvement in the asset quality. So improvement of the asset qualities allows us to have better portfolio, which is earning us more yield on that portfolio. So there is a yield uptick. And on the other side also, there is a cost reduction. Our cost of fund is reducing. Last year, our cost of fund had reduced from 11.02 to 10.27, almost 75 bips of reduction. This year also, we anticipate 25 bips of reduction. The most important part that I would like to highlight is recently Muthoot Microfin has been upgraded in their credit rating by CRISIL. We are now AA minus rated company. And this allows us an avenue to source capital from other sources as well, like mutual fund, insurance companies. We can access capital from them. And definitely that will allow us to diversify our pool of capital and also negotiate better. And we are anticipating at least 25 to 30 bips reduction in our cost of fund further, which will help us expand our yields and NIM as well.
That's the view coming in, but let's also talk about cost of funds in that case, because recently you had that rating upgrade, because of which you had earlier said that your cost of funds is likely to come down by 25 to 30 basis points this fiscal. The incremental cost, I believe, currently is already at 9.9%. Given that you have 9,500 crore of annual borrowing, what will the absolute rupee impact on net interest margins be as a result of this credit rating upgrade and the consequent reduction in cost of funds?
See, if you look at the contribution to the bottom line, truly from this, around 25 to 30 crores of increment in the bottom line will purely come from cost of fund reduction. We have this quarter already borrowed around 2,664 crores of loans, and we have a sanction of around 3,485 in our hand. We maintain a robust liquidity. The most important part is that this 2,600 crore, which has come in our Q1 in borrowing, it has come at a much, much lower cost. It's 9.9. In fact, there are certain transactions which are much, much below, because PTC is one route that we are using, and we are doing PTC at 8% or sub 8% kind of transaction. So that is really helping us to reduce our overall cost of fund. The 25% to 25 bips to 35 bips is a conservative estimate. It can even further go beyond this as well for the full year.
Okay, so that's the view coming in on the cost of funds. But thank you for taking your time out and joining us here on ET Now and sharing your thoughts on what the outlook for the company will look like. And we look forward to interacting you once again after the earnings are reported. Thank you for taking your time out and joining us. On that note, we need to slip into a very short break, but come right back. We have one more management lined up after this very short break.
Welcome back and thank you for joining us at Midcap Masala. This is quite an interesting show that we've got, a very interesting lineup that we've got for you now. Joining us today are Manish Gupta, founder and chairman of Insolation Energy Limited, and also with him Vikas Jain, founder and managing director of Insolation Energy. Now, Insolation Energy has just announced its wholly owned subsidiary, Insolation Green Energy, secured a major domestic contract. And we just want to ask you, congratulations, first of all, on the recent 558 crore order from NTPC Energy that you've just received. Does this order mandate a domestic content requirement, that's a DCR module? And how large does how does a large scale order like this impact your blended price realizations?
Good morning, all. First of all, this NTPC's order is a strong endorsement of our execution capabilities. Insolation Energy, we are having a very good manufacturing capacity in Jaipur. We are having 3 plants with more than 5.5 gigawatt of manufacturing capacity. We can absorb several orders of like this simultaneously without affecting our existing business model and our channel model, which we are doing in the pan-India basis. This order reinforces our position as a partner that the government and large PSUs can depend or we can execute this type of large order for our future endorsement with the solar energy market in our country.
Okay, and good morning, gentlemen. Ashesha this side. Mr. Gupta, I wanted to ask a follow-up question on this. I understand it's a big order for you from NTPC Renewable, but with this order win, where does your order book stand now, and what will the execution timeline of this NTPC order win will be?
This order should be executed within this financial year only. We will execute this order up to December 26.
What is the total order book size currently, Mr. Gupta?
Our total order book size currently is more than 2.1 gigawatt. This is mix of DCR and non-DCR, both type of solar panels.
Right. Mr. Jain, if I can just ask you another question. With the ALM Part 2 implementation now taking effect, there is quite a strong government push for domestic cells. So are you seeing any near-term supply chain bottlenecks in securing domestic cells for your module manufacturing before your own Narmadapuram cell facility starts going live?
Yeah, good morning. As of now, you rightly said, there is slightly disturbance in the supply chain for the DCR solar cells, but it will not last for more than a quarter or max 6 months. So we have this NTPC order that we are talking about is a totally non-DCR order. Other than this, we are already having more than 700-800 megawatts of order, which are also non-DCR. So almost 1.5 gigawatt orders we have to execute before our cell facility come into production. So we have sufficient time and margins to execute these orders before our solar cell factory at Narmadapuram is fully operational. Within next 5 to 6 months, our solar cell factory will be fully operational. After that, there would be a tremendous change in the valuations, in the EBITDA level, in everything of the company.
So that's as far as execution of your current order book is concerned, right? Mr. Gupta, let me come back to you. And my question is with respect to the massive capacity expansion plans that you have, whether it is solar cell, whether it is solar module, whether it is wafer and other ingots. What is the total roadmap looking like? How much capacity expansion plan do you have over the next 3 to 5 years? And what will the company look like after everything is completed? I believe most of it is likely to be completed in FY27, and probably even if it spills over, it will be in FY28. What will the total capacity look like post that, and what will your top line look like after the capacity expansion is completed?
Currently, we are operating with 3 manufacturing facilities of solar panels in Jaipur, with total cumulative capacity is 5.5 gigawatt. As our company roadmap, we are going for backward integration for aluminum frame manufacturing facility, which is our Unit 4 in Narmadapuram. Total 18,000 metric ton of the annual manufacturing capacity, and our Unit 5, that is solar cell manufacturing capacity, 4.5 gigawatt. These both capacity will operational within next 6 months in the Narmadapuram. The total cumulative investment our company is doing more than 1,550 crore in the both this expansion. And later on, as per our government notification, the ALMM Part 3 will implement from June 28, where the ingot on wafer is also mandatory, the Make in India, and the company board is already decided to go for further backward integration and ingot on wafer, and we are very soon start our this ingot on wafer manufacturing of 4.5 gigawatt, maybe in the Narmadapuram or some other location. The total cumulative investment is around 1,200 crore rupees. So overall, the investment or backward integration is robust. We are planning for our company within next 2 years. Company totally invested more than 2,500 crore rupees for the backward integration, and we are committed for Make in India for this all polysilicon chain, whatever the government decide for this achieving of 500 gigawatt 2030 target of our country renewable energy target. The solar power or renewable power generation in our country, and the manufacturing of the component and equipment in also in our country. So insulation is very much aligned with our country goal, and we are committed for fully backward integration for this all manufacturing capacity in upcoming years.
Okay, so that's the view coming in with respect to capacity expansion plans. The company clearly has a lot of them coming up over the next few months. But Mr. Gupta and Mr. Jain, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts. And we look forward to interacting with you once again after a few months. Thank you for joining us today.
Thank you very much.
And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. Buy now, sell now will come up next.